Hello everyone, welcome to asktraders.com with our live video analysis that we do every Monday. Don't forget to click the subscribe button to see the next video in the coming Monday. In today, I will be changing slightly how we do the analysis. Before we used to do it on multiple currency pairs simultaneously. But from what I can see, there are more interest in specific setups rather than the general overview. So we will try to go in a bit different direction. So today it will be Swiss franc versus Japanese yen currency pair, and we will try to understand what is the potential in the coming week. We will start with the higher time frame, looking at the probably most common daily chart. Here we can see that the price is trending downwards because lower lows and lower highs are being produced, suggesting the validity of the downtrend. Besides, previous level of support has been broken, which is now acting as the resistance. The 200 exponential moving average also broken, and the breakout point of the moving average is also corresponding to the previous support and also acting as the resistance. It makes the area of 111.00 a very strong resistance area and potentially a supply zone, which is interesting for the sellers. Now, another thing is the Fibonacci bounce. We have applied Fibonacci to the last wave, last impulse to the upside. Price has broke actually all Fibonacci's, although it went back and corrected off 61.8 pips. Very clean bounce, although small spike produced, but overall this remains a very strong resistance, and price started to move lower. Another point is here price attempted to reject this area where we can see the 200 exponential moving average, although after some days it finally broke to the downside. It corrected back up, and now yet again price reached the area of this breakout point and rejected the 200 exponential moving average once again. And yet again, for the second time, we have this rejection of exponential moving average, and yet again price has reached this resistance. It is very clear that this is massive resistance zone which is being respected. And this means that the sellers are still in control. Bears are dominating on the Swiss franc Japanese yen currency pair, and we can expect trend down to continue. While the trend down could be quite heavy, the nearest support should not be ignored. We can see that price has established the low near 108.70, and this is the nearest downside target. We're yet to be seen whether the price will break to the downside or not, but if it will confirm, or it might confirm, that the trend is getting even more bearish in the long run. Now, moving to the lower time frame, this time 8-hour chart, we have applied simple downtrend trend line. Price has rejected the trend line. We almost reached the exponential moving average, also almost rejected here, and now price has approached the Fibonacci retracement level, which is 76.4. Currently it is being rejected. Prior to that we had the rejection of 88.6 pips. Perhaps this time price will reject off the 76.4 pips. Moving on to the next time frame, this time it's 4-hour chart. Here also we had the rejection of exponential moving average once, and now price attempting to reject it again. Whether it will reject or not, we're yet to see, although currently it is being rejected, which is getting very, very interesting, especially for the sellers, whether the price will be able to close below or not. Besides, we are respecting the two Fibonacci retracement levels, 76.4%, both of them. We can see we applied one fips to this wave down and another to this smaller wave down, and both are showing this resistance area. Price could still close lower and then attempt to produce the spike to retest the downtrend trend line, but the key resistance remains at 111.50. Only then, if it's broken, price might go to the upside. Now we will move to the lowest time frame. It is 1-hour chart, and here what we can see is that RCI is going into the oversold zone, which means that the price still can consolidate. But the interesting point, how it can be applied for trading RCI, is if we apply just a simple trend line and see when it will be broken. When the RCI is broken, it's most likely will continue going lower. Another thing is the ascending channel. The ascending channel has been used to actually put the Fibonacci retracement level. We have used the last bottom and applied Fibs, so the 50% remains at this breakout point. What we can see is that the resistance is at 38.2%. If we apply now the Fibs after last rejection of the channel, we have 161.8 Fibs. Both of these levels are located at 110.70. And don't forget that previously this level is confirmed also by 76.4, 2 Fibs, downtrend trend line, and exponential moving average. This makes it a very, very strong supply zone for the Swiss franc Japanese yen, and we might see the downtrend continuation from this point onwards. On the upside, what is important to watch is obviously this resistance at 111.52. If there will be a daily close above, not the spike, but the close above, the bearish outlook will be compromised and pair might be going to the upside. Nevertheless, up until now, we can see that the resistances are being respected, and this is still validates the downtrend in the short to medium term at least. So that's it for today. Hopefully you enjoyed this video. If you did, just don't forget to put the like button and subscribe to see the next Monday analysis for the specific currency pair. Good trading to everyone, and speak to you next week.